Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the terrific Tuesday, the September 2nd edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 days, yeah, during the next 60 days too. But how about let's just start with the next 60 minutes. During the next 60 minutes, I'm here to serve you. So feel free to give us a call at 877-927-6648. If you can't call in, we've got you covered there too. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, in our Tiger's Den, well, anything will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Nearly every indice in the green. The transports just turned slightly negative, down 14 points. Otherwise, the Dow's up 250, the S&P 31, NASDAQ 146. Russell is up 2 points out there. Lead the charge to the upside. You've got Google up $33, Intuitive Surgical 24, Dexcom 20, NVIDIA Corp up 21. To the downside at Shopify, 4%, nearly $50. Tesla's off $32, 7%. Zoom Video's down 27 or $7. Mercado Libre off 1.5% or 18 buckaroonies. So we got a bunch of questions that have come in. Let's do a. I think we'll go to the well. Let's do this here. Well, as long as I'm on this, many of you may have heard the update, the 1 o'clock update out there. And if you are trading the mining equities, if you are trading the metals out there, please have stops in place. Please, no, it's only Tuesday. If this were Friday, this Paul Revere would really be running through the streets of TFNN here and telling you be careful below. Where's below? $1,730 in the case of Goldilocks. If we get it closed below Stevie's green line, which is currently priced at $19.58. This is a weekly time frame. It's only Tuesday. Wednesday. Oh, today's Wednesday. I'll eventually get my days right here. I don't know. Can you even remember which day it is? That's what COVID has wiped out the which day is it kind of memory bank in Stevie's mind. That is not too difficult to do. But a close below 1958.50 is a signal that price may be pulling all the way back to 1730. Now, right now, the first stop on the way down is going to be in the 1920 level. And how do you know that, Steve-O? Well, that's the bottom of its daily profile. So let's go take a quick peek at that. This way we get gold sort of out of the way out there. There may be other questions, and feel free to ask. Here we go. We take a look at gold. So you're looking at the very left-hand panel. That is the October contract. So I take that back. We're looking at the panel right next to it, panel number 2 out here. So as we take a look at that, 1920, even Steven, is the bottom of its daily profile. You'll also see a number of trend lines that are out there. So that is where Goldilocks is likely headed. This is a bullish structured profile. So in addition to Stevie's green-red line on the weekly time frame chart, we already know price is trading below that. You get a close come Friday. Doesn't have to be Friday, but if you do get a close, 2 closes certainly below 1920, that signal is, be careful, there's an A to B equals CD to the downside on a daily basis that is formed. And you know that intermediate term-wise where price is headed to. Now, how can that possibly happen if that's going to occur? Well, if it's going to occur and we're going to get a pullback like that, what we should see is we should see gold falling in all of the major currencies. So to do that, we go take a look at a chart like this. On the very left-hand panel, you've got gold expressed in dollars, and next to that in euros and yen, and then sterling. If you take a look at gold today, I am talking to all the bulls out there. Expect, anticipate that gold's headed back into that 1920 level. Don't pay attention to the profile prices on this screen here, because I'm using my synthetic contract in order to grab all kinds of historical data for other tools that I use out here. But 1920 is the next target in gold on the way down. Now, is there any chance we're going to see price stop before then? Well, on a 30-minute time frame chart, you are in bar number 8 of a TD9 count. That took place at 1 o'clock. So it says by 2 p.m., between now and 2 p.m., you should see a bottom in gold. I'm not talking about a big bottom. I'm talking about a 30-minute bottom. And if you don't, boy, that is a signal of a big momentum move to the downside. So be whatever you want to be. I just suggest that you be careful out there. And then I'll just pull over the U.S. dollar index since we're taking a look at gold price and all the currencies. I know somebody had written in, wanted me to take a look at the U.S. dollar index. You've been listening to the show. I've been explaining to you that the U.S. dollar index has been sending to you and I signals that it is absolutely forming a bottom. It's got TD9 counts. It's had several Rhodes momentum indicator signals. You got another one that formed yesterday. You've got a hammer candle out there. Now there's resistance above, and the next resistance level that the U.S. dollar index is going to struggle at is between 93.18 and 93.54. That is the center and top of its bearish structured daily profile. But if price closes above that, then you're looking at around a 94.37. And if you get above 94.37 on a daily basis, it tells you that there's a change in trend. So you got to take things one step at a time. But for those of you that were thinking the U.S. dollar index was going to just simply get toasted, roasted, in all of the above, sorry, not the way the technical pattern is set up as we speak right now. Okay, so we took care of gold. I do want to go to these questions because there's so many that have come in. I don't want to not be able to get to these. So let's go take a look at what I'll do is be maybe a bit quicker than normal. We'll still give you all the information that you need. So Dennis G writes in and says, hey, Steve-O. He didn't really say, hey, Steve-O. He said, hi, Steve. I said, hey, Steve-O. But Dennis writes in, hi, Steve, SPWH. Could you look at it for a long-term investment out here? So we will. I don't even know what it is. I don't need to know what it is at this stage here. Today is not the day. You're getting a dark cloud cover candle on the daily time frame. This is trying to form a top. This is the exact opposite of what we just looked at in the U.S. dollar index. You got price stretching to the upside. The U.S. dollar index price was stretching to the downside. Then you have all of the bullish, or in this case here, the bearish reversal candles, a shooting star back on August 19th. Today, a dark cloud cover candle. This is suggesting to you that SPWH wants to target the 1398 level. That's its first breakout. 1240 would be the next one on the daily time frame. The weekly time frame for SPWH, well, it's got price rising to a less relative energy. But if it closes above 1630, that's Stevie's green line, then it's kind of neutral at this stage here, trading between support and resistance. But Dennis, if you get a close on Friday below 1630, based upon what we just looked at on the daily time frame, the daily signals will trigger. And also, if you get a second close below Stevie's green line, that would be this week. 1093 could be the number to be watching for. On a monthly basis, I don't have any kind of a topping signal. So here's what you're going to do, Dennis. You're going to be patient. You're going to want to watch to see how this closes out the week. If it's below 1630, you'll know you'll keep that powder dry, and you'll be looking at price like 1240, 1398, or maybe even as low as 1093. We'll just have to look at the patterns as price moves lower. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So, when we take a look at all these time frames, you're going to get different messages, and it's important to take a look at those time frames to understand what's going on with whatever it is, the instrument that you're looking at. So we took a look at gold. We looked at the weekly, the daily. We wanted to understand because there's a lot of short-term thought processes going on. So, hey, what's going on in the short-term time frame? And we're just using the exact same tools. These exact same tools help to provide us with what the instrument is doing during that specific time frame. Here on the screen, if you're watching this right now, just to make it a little bit easier for me when folks either call in or write in by email or post something in the den, and also so that I don't forget something that might have been requested of me, I've just built this little tool, this little template out here, so to speak. I can input any instrument. And so, for example, I'll just put an apple right now. And in an instant, sort of an instant, I'll know exactly what's going on. I'll know on a daily, weekly, or monthly basis whether there's any kind of Rhodes momentum indicator signals. In the case of Apple, there's not. By the way, these are the instruments that have already been requested today via email, and you can see many of them. We've got topping signals. We'll see that as we go look at the charts. We also can understand what's going on a weekly basis. Here, we're looking for those TD9 counts out here. Patterns on the daily, weekly, or monthly. We're looking for those Chapman wave. We're looking for those letters G. Those are the seventh wave moves out here. Baz always looks to look at anything that's got wave number 4, D, E, or F out there. So I've gone ahead and highlighted those in yellows for you to take a look at. We've got the up count and the down count. And then you've got those key levels of support, Stevie's green or red line, the oscillator and change line, daily, weekly, and monthly. So this way, for Dennis who wrote in, he wanted to take a look at SPWH out there. We went through that. Here it's got the resistance for the daily, weekly, and monthly or support levels, and he can have those if he's watching in on Tiger TV. So let's go to our next question. This one came in from John in Sarasota, who wanted to take a look at plug. So PLUG is the ticker symbol. John's question is down or bounce. So as we take a look at it. Here we're. I don't have. How did I grab natural gas? It's very smooth, Steve-O. I have no idea how I just did that. But we'll pull over the actual chart with plug on it And that way it'll make it a little bit easier for us to look at. So here's the Rhodes Momentum Indicator signal. You can see price moving higher, doing less relative energy. That was on August 19th. Right now, today, you're getting the confirmation of that, John. You've got a bear sash candle. I don't know what the end of the session candle will be. If it still is a bear sash and it closed below Stevie's green line, then you know the answer to the question. Is this going up or down? Or you say down or a bounce. It would be going down. And be going down to where? Look at the screen out here. You'll pick it out. You will see the area where plug is headed to, or the first areas that plug is headed to. Exactly. It's headed to the bottom of that bullish structure daily profile. So that would be between $10.53 and $10.96. I put up the chart. You now can take my set of tools, you can interpret it, and you can then understand where the message of the market is. This way you know that, Stevie, all I'm doing is narrating the chart for you, just reading what buyers and sellers are communicating to you and I. We know that when they make tops or bottoms, that when the certain patterns that you and I look for are present, the hair on the back of our neck, if we have any, stands up out there. And we know the methodical process, how the market will go ahead and communicate to us, bullish or bearish, up or down, out there. So we just go through that same process. Every chart, that way it doesn't matter what plug is. It doesn't matter what SPHW or whatever that was, or whether it's a currency. We're using the exact same set of tools out there. So whatever time frame it is you trade, you want to learn these tools, or you should want to learn these tools, I think, out there. And on a weekly basis, I don't have any support inside of plug, John, would be 1085. So your question with regard to down or bounce plug is going to be the downside. You also want to take a look at PDYPY. Again, it didn't. Come on. Don't. There we go. PDYPY. See if I can actually type here. I'm having problems with this keyboard. It's a beautiful thing when it works, but man, when it doesn't work. PDYPY. There we go. Okay, so we'll see what this is. I don't know the instrument. I'm not going to worry about it because we have so many in the queue out here. But here you can see the Rhodes Momentum Indicator signal. Price moving higher, doing less relative energy. Yesterday was a bear sash candle. Confirming that pattern today, we've got a gap to the downside. Price has found its first level of support, John. That's at the top of its bullish structure daily profile, 78.25. I would have to say that this is probably targeting its TD9 breakout level, 72.82. It does have support between 75.83 and 76.29. So at this stage of the game, more likely this is headed down based upon those topping signals. The first level of support is held, though. A close below 78.25, 78.20, somewhere right around there. You're looking at either 72.82 to about the 75.83 level. So, John, thanks for writing in. Hope that helps you out. Michael writes in, just curious, what do you think about the market? Seems like 2009 all over again, with market just going up because of QE. One factor you mentioned was that Warren Buffett was not buying into this rally. Is that still the case? So let's not talk about Mike in Nashville. Let's not necessarily talk about Warren Buffett. Let's instead, Mike, you and I go take a look at the charts to try to answer this question, because this is a question I'm always trying to answer. So I'm relatively I can. So anyways, so let's go take a look at how would Stevie look at this. So your question seems like 2009 again. We're just curious about the market. So one of the things out here that is unique or different, if we take a look at the markets, and by markets, folks, I want to take a look and understand what's going on around the globe. You should want to understand what's going on around the globe too. If you trade gold, if you trade anything really, but certainly if you trade these commodities, you certainly want to understand how those commodities are priced in euros, yen, and pounds. You may even want to go ahead and add the renminbi, the Chinese yuan out there, but at least have those four primary currencies and understand how those instruments are trading out here. Well, when we take a look at what's going on across the globe, here's 9 ETFs, so you can do this at home. Here we can see that the Dow is now trading above its 2019 high. I'm using the Dow via the Dow Diamond, so it's not going to be exact match because of dividends and so forth. But still, you do the same thing. When price trades above the prior year's high, you've got a breakout mode that's going on. So, Michael, as we speak at this moment, it's very close. We're at 289.92, 288.63 is the number. So we've just gotten above it. But as long as price remains above that, then the Dow should continue to rally. Take a look at the other markets. Next to that is the UK. It's been in a downtrend since 2014, 15 out there. That's when it made its high. Take a look at Australia. Its high back in 2011. then go over to Canada. Now we're in the center panel out there. In Canada, you're back at 2011. If you take a look at China. China is up at new highs out here. So you've got a breakout mode in China. In India, you don't. In Germany is now trading above the 2019 high. So it is also in breakout mode out here. Next to that, in Japan, you can see its descending trend, the high taking place in 20. So across the globe, we don't really have the 2009. In 2009, we go take a look at all of these instruments for all these countries, and we'll see them, Michael, all going higher off of the bottom out here and continuing to move higher, so to speak. We do not have that going on as we speak right now. We have a lot of pain going on across the globe. So there's no breakout party going on. But that wasn't your question. You're really curious when you said the markets. You were probably really referring to the U.S. stock market out here. But it's important to understand this. The next important thing to understand, or what I'm trying to understand, is if the Dow is now above the 2019 high, has the global flow of capital begun to make its way to the U.S.? Because if the answer to that question is yes, Mike, then these markets will continue moving higher. We could throw all of my technical tools and everybody else's out the door, because that'll be the technical tool that would drive markets higher. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So what I did here, since we had that break, here is the actual Dow chart. That way I don't have to worry about the dividends or what have you. You'll see that today is day number 1. With price moving above the 2019 high. And again, it's the simplest. It is the simplest of ways to be able to look at any kind of an instrument out there is price breaking out. And if you begin trading above the prior year's high, it's breaking out. You can use it on a much smaller base, but I'm just taking a look at where we're at and really go back to Michael's question, which is really pertinent with regard to today. And as I saw that take place, because in essence, this is really where a counter trend rally you would think might have stopped. It didn't. But if you do trade above the 2019 high, I have to entertain the idea that the market may be breaking out. Well, if the Dow was breaking out here, then in order to sustain that rally, it's got to have a constant flow of capital into it, and that capital comes from around the world, and that's why we want to understand how is an instrument trading in terms of well, first, how are instruments trading around the globe, but can we detect a concentration of capital somewhere? Now, this is not a technical tool. This is the most fundamental technical tool that you could ever want to understand with regard to what the markets are doing. Now, it gets a little tricky. So how do we do this? Well, first, if I go back to my main page out here. Well, first, what I've done here is if you look in this little box over here, you'll see at the very bottom, wherever I put my cursor, it tells me we're 114 days since the bottom back on March 23rd. Now, how I use that is I use that to be able to identify what is the flow of capital been across in all these instruments since that time period. So now we'll go take a look at that. That's this. So it's basically been 24 weeks since we've been there. And here you've got the Dow, which is in the upper left. Then you've got all the other markets. You've got the UK, Australia, Canada, China, India, Germany, Japan, emerging markets. You've got Brazil, Hong Kong, Mexico. So we've got plenty to look at out here. What we're looking for is a dominant rate of change where it just totally sticks out. And we still don't have that since those lows. However, what we also want to do, or what I've done here, is I take into account and I say, well, maybe the global flow of capital didn't know what in the heck to do. It's always looking for confidence. That's what it's looking for. It's no different than you. It's no different than you being a steward of global capital out there, and you would invest it where you have the most confidence. So what I've done here is I take that same tool where I try to figure out, okay, well, where was another bottom that formed out here? Well, a recent bottom inside the Dow would take us back here to July 30th. That was 24 trading sessions ago. So for my work, I believe it's 25 that I've got to put in on the day. Yeah, 25 out here. So I'm taking a look at the prior day's close out here. So now I've taken us back to a much shorter interval of time. I'm trying to figure this out and catch it. I'm especially doing that, Michael, because your question is right on, because it factored into what I was already taking a look at today, specifically because of the way that the Dow began trading. And now when we go back to this period of time, now we're starting to see the inklings of that possibility. This is the inkling of a possibility that the global flow of capital is, in fact, moving into the U.S. out here. Right now, and the Dow's been in the same time period, the NDX is up 16%. That's at the very bottom, rate of change, versus the Dow up 9%. The global flow of capital will stick their money into the Dow. The global flow of capital is always looking at, what do you think is their number one concern? Certainly getting their money back. Well, how do you get your money back? Liquidity. So they want to be in the most liquid of assets out there, that global flow of capital. And that's why the focus is still on the Dow, will always be on the Dow out here. And this is how we use it. This is the real benefit of the Dow, is being able to use it to be able to track and try to identify the global flow of capital. So, Michael, don't be thinking, 2009 and QE. Markets will go up because there is a concentration of capital, not just the Fed out there, but an absolute concentration of capital. And this is something right now, this chart here, or this set of tables, is something that we have to keep an eye on, because if this is like a race, if we really start to see the Dow pull away from all the other markets, this is going to be our early signal that, in fact, that's what's going on. Now, we don't have a total confirmation of this just yet. We're only in day one, right, of the Dow, well, I'm saying right, of the Dow trading above the 2019 high, and a reason to really focus in on this and try to figure this out and get it right. So it's something we're just, here's again, this is the chart of the Dow. We're just going to have to keep our eyes on it. Look, there's plenty of patterns out here where we could see some topping signals. So I don't want to just jump to that conclusion, but Mike, you might be right, and we're going to continue and run up till when? That I don't know. At this stage here, it's just a wild blank guess. You can figure out what the blank might be out there. It runs up through, I don't know, October, November. I don't know. Here's the Dow Equity Future Contract. So here's the fly in the financial ointment, so to speak. Today it's going to be bar number 9 of a TD9 count. Prices moving higher, doing less relative energy. Stevie's got wave number 7. Letter G is one possibility as well for another top out there. So you got 3 different potential topping signals in the Dow Equity Future Contract. So, Michael, I've got to watch over the next several days to see how this plays out here. The same thing in the NDX and the S&P. But if these signals don't identify top, prices keeps moving, it's really an indication to you and I that, yeah, the global flow of capital has begun to move into the United States out there. And maybe that is the reason, and Jimmy writes here, VIX is positive again, and maybe that is the reason, because what I'm really grappling with in my mind is this, and that is just what really Jimmy put it there. Jimmy wrote the VIX is rising again. That doesn't bother me whether it's rising or falling. It's the mere fact that it's rising and it's above its 50-day exponential moving average. That's your bottom panel on the left, and yet the S&P futures are up 3750. And this is unusual. Well, look, this is what generally takes place, and it's still May. This is why we've got to be cautious out here. It's still May. This is generally what takes place. The yellow boxes or yellow rectangles out here is generally what takes place when the S&P 500 or when the spot volatility index is above its 50-day exponential moving average. And we're there right now. I really, the green box here is going to have to come over. But in any event, you can see why we should be concerned out here. Yet, if that global flow of capital has gotten to the shores of the U.S., that stuff won't matter, because it's capital trying to park itself. That kind of goes back to Ruby's question yesterday. What's more important, price or volume? Price. That global flow of capital is coming in here. It'll continue to push up price, and we'll have to continue to keep an eye on it. So didn't mean to belabor that, but great question, Michael. And this is something we're just going to have to continue to come back to and watch. But we have the tools right here. We have the tools right now to be able to figure this out, you and I. We just have to figure out where the start date is. That makes sense. Continue to track it. Watch all these instruments out here, and we'll know. And when we know this, you're talking about you're talking about a competitive edge and a competitive advantage, and something that you'll be able to easily justify in your mind why the markets are doing this, why Main Street is doing something else out there. Okay, let's get to our next question. LC writes in and says, can I provide price prediction for UVXY? No, I can't. Not because I can't, but because I can't. But when we get back to this break, we're going to do it anyways. We're going to go take a look at that crazy, wild instrument out there called UVXY, trying to play the spot volatility index. Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So if we just apply the same tools that we do to UVXY out here, that's what I'm going to do. It's the only way that I can provide you with any information. Obviously, if the spot volatility index is running higher, which it is at this stage here, this should continue to move higher. But look, there's a disconnect, LC, that you're pointing out inside your email. You've got the spot volatility index going higher, and you have the S&P going higher. And in essence, your conclusion is one of those is wrong. And you're trying to take a long trade in the UVXY, assuming that the S&P is the one that's wrong. And I don't know that we can make that assumption. I don't know. I know I cannot make that assumption based upon what you and I just looked at, based upon understanding that this is day number one of the Dow that's moving above the 2019 level. This can put it into a breakout mode, much like the S&P and the NASDAQ that previously did the same thing out there. And then when we start to take a look at short term, where's that global flow of capital coming in out here? The global flow of capital is going to be much smarter than a smaller group of traders trying to position themselves in the VIX out there. So it is difficult for me to give you that answer, but I do want to provide you with this perspective. Because you must, the way I'm reading that your email here, again, I think your email is thinking that the S&P is wrong. Don't be so certain about that. I cannot be certain about that based upon what you and I just did, what we just went through. My logic can be definitely flawed. Now, let's assume that that's not the case, and UVXY is going to continue to move higher. Where's its target? Well, at 28.56 was a TD9 breakdown level out there, and so at this stage here, I'd say that would be the target to the upside. This would be bar number 6 of a TD9 count out there, and that's probably the best that I can provide to you, LC, but you've got two sides of the equation, and I can tell you I don't know which side is wrong at this stage of the game out there. I wish I did, because if I did, I would be trading that all day long. Jerry writes in, and Jerry says, can you please run your process for the U.S. dollar and the GDX? So we already did the U.S. dollar, Jerry, but let's go take a look at the GDX out here. So let's put the GDX up with regard to the daily, weekly, and monthly profiles, see where things are trading. GDX back inside its daily profile. So support out here, 39.57, resistance 41.64. So within inside the weekly profile. And support, 32.77, resistance 45.78. Prices above the monthly level of resistance, the top of that profile at 28.80. Okay, so now you know where buyers and sellers are positioned for those time frames out there. If we take a look at the daily time frame chart here for GDX, what do we have? Wave number 7, letter G. We've got a Rhodes momentum indicator top. Price is below Stevie's green line out here. So I'd say 38.34 is more likely a target. Any close below that, Jerry, that'll spell 32.69. The GDX is likely going to track, directionally speaking, with gold out there, so you're going to really kind of have to time the two, so to speak. In case you didn't get the U.S. dollar index, that has a firm bottom. It does have resistance around 93.18, 93.58, and then one more level up above that. But it's got a nice solid bottom that has been forming over the past several trading sessions out there. So there is the GDX. Jared, I hope that helps you out. Just trying to make sure I get through all these questions. Jared writes in. Jared says, can we take a look at the XLF? So let's go take a look at that, the financial sector out here. XLF, let's go see what it is doing. Looking for an entry into a short position, short term. So if that is the case, then today is going to be bar number 8. So far, it has not taken out the high of the August 28th level. August 28th high is 25.45. If price is able to get above that level, then this would be bar number 8, and this would say that there could be a top in the XLF. Could have been today's high, could be tomorrow, or could be Friday out there. And then I'd ask you, Jared, hopefully we've got some real certainty there for you to take that short position going into a holiday weekend. The top of its profile, I'm just going to come back over here. It might be easier for you to see. I don't know if it's easier for you to see the black background charts or not, but let's put up the XLF. Here, when one fell swoop, you'll see the daily, weekly, and the monthly profile level. So the daily just making up to resistance right now, that's at 25.45. So this is going to be bar number potentially. You'd like to really see at least a TD9 count pattern. And the high of today, let me see, did it do it? Oh, today's high is 28.45. And the high I need to take out was 25.45. So it hasn't done it. So, Jared, you're going to wait to at least get a punch through that level. Now, if it closes over 25.45, you've probably got to stay put and wait for a better signal, because price would be closing above the top of that daily profile out there. I'd say you could, I'd say you could have that fire away approach if you wanted, but I can't because I don't have that 8 count for you. And so that's what I would be looking at there. So hopefully that makes sense to you. You're better off to try to, I would say, to go short the sector. Let's take a look at this. Let's see what the profile levels communicate to us about the XLF. That's a good idea. So let's do this. We'll just specifically take a look at the XLF. Give me a second here. We'll pull that up. So you're bullish in the weekly, daily, month, and weekly, daily, 240 and 60-minute time frame. So you are market breadth bullish in all of those time frames out there. And so you know what I'm going to say here. Keep those hands in your pocket. You didn't know I was going to say that because I didn't know I was going to say that. But you know what? You knew what I was going to say, basically. So I hope that helps you out. And, maybe this is much like the markets, and we'll have a better feel towards Friday or Tuesday of next week. AK writes in, that's Andrew. He says, I'm long HARP. So let's go take a look at Harpo Marx out here. Remember Harpo Marx? Oh, those were the great old days, right? You used to be able to go to a movie theater out there. You can't even do that anymore. I don't know what's happened with my keyboard here. Give me a second. Boy, oh boy, oh boy, oh boy, oh boy. Let's try to get an HARP. Apparently my keyboard doesn't like Harpo Marx, so come on. Jeez Louise. HARP. There we go. HARP. Okay, so now we got Harpo Marx out here. Stevie likes Harpo. HARP. And, okay, so we take a look at this Harpoon Therapeutics, which is trading up towards the top of its daily profile. That's resistance, 14.19. The high today is 14.21. AK writes in, I'm long HARP at 13. Could you take a look at the stock? Hoping it will go back to 25. Let me know your thoughts. Well, if it's going to get back to 25, it's got some resistance levels it's got to get through first. The first one is 14.19. The second, if it could get through that, is going to be 15.31. So you're a long ways away from getting a signal that is taking place. Now, you do like to see you've got some higher bottoms and some higher highs out there. So let's go see what the other stock charts tell us about HARP, which is Harpoon Therapeutics out here. And we take a look at it. It formed a nice TD9 count bottom at a breakout level of support. That's the red line going across my screen out here. You've got resistance at 15.59. So now we understand, Andrew, when price on August 21st, that wide-ranging bar, and it moved all the way up and got above 15.59, but by the end of the day, closed back below it, that's where price broke down. So that group of sellers that began that journey to the downside, they're still there. So 1559, that's the daily time frame, is going to be a significant area for you to get through. Chances are price is going to get back up there. Whether it'll get through or not, I can't tell you. 1695 is another resistance point, as well as 1832 out there. Weekly time frame, real quickly, what do we have? Price had come back to its breakout support, 1133. Prices below Stevie's red line, 1436 out there. Until you see a weekly close above that, somewhat dangerous. Andrew, hope that helps you out with regard to Harpoon Therapeutics. Steve Rhodes with TFNN. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So currently we got the Dow. All the indices are in the green. Dow's up 305, a little over 1%. Same with the S&P. It's up 39 points. NASDAQ 100, slightly not as percentage-wise, not as large of a move, up 78 points, 0.6%. Russell's up 0.25%, 4 points to the upside. So what are we going to do out here? Well, we're going to continue to monitor certainly the global flow of capital each day out there, trying to make a determination whether or not capital from across the globe is now finding confidence inside the U.S. Over the course of the last, how many days was it, 25 days, the answer is starting to say, yeah, maybe. Let's just take a look at the rate of change based upon the Dow and all these other instruments across the globe out there. And if that is the case out here, if the global flow of capital is coming to the U.S., we will see these markets continue to move higher. That is an absolute possibility out there. At the same time, we'll continue to monitor this. We're going to continue to monitor all the different patterns on the daily time frame charts for the Dow Equity Future Contract, the ES Mini, and so forth. In the short term out there, if we take a look at the ES Mini right now, this is a 30-minute time frame chart. We can see that price is beginning to move higher, doing less relative energy. We know that because Stevie's green line's out here. That's the only potential of a topping signal. With regard to what the ES Mini did at the open today, out here, price pulled back and tested his breakout support, 35, 33, 75. There was no pattern that was forming out there. John, I saw a post inside the Tigers Den about the NQ. Why didn't you buy that dip or what have you? You know, if you were watching the breakout levels for the 30-minute time frame equity futures contracts, that would have been the only signal that I could have seen to have taken a long trade. No pattern like you and I are used to, at least for the 30-minute time frame chart. But this is a pattern. Price pulling back to where it broke out before it then makes its next move out here. So if we do see some type of bearish reversal candle on a 30-minute basis over the course of the next couple hours, that would identify a short-term top and a pullback, but no levels of support have been broken. Inside the Dow Equity Future Contract, price never made it even close to its breakout level. It was way down at 28,463, but we are in bar number 9 of a TD9 count. So we could see a short-term top form. Folks, stay tuned for 2 more great hours. Thanks so much for being here. I'll look forward to seeing you on Thirsty Thursday. Have a wonderful Wednesday.